Okay, this 8:14, and our time is okay. It's exactly 8:15. So the topic is demand zone and the supply zone. Another name for demand is okay. Another name for demand is support, while that of resistance, while that of supply is resistance. Sorry, let me check my connection. Okay. No, we are here in Nigeria. Our network is not all that strong, but things are getting better. We must be positive. So let us go straight to the point. In a layman's understanding, support can be likened to as a kind of an obstacle, a wedge, an obstruction that can prevent an object to continue going down. Whereas resistance is the opposite. Resistance can be likened to a kind of a ceiling. For example, in a house now, you find out that one decking house there is a kind of if you want to pass an object there, it is impossible unless you can break it. So that's an example of resistance. When you are trading, the first thing you do is to check your higher time frame. Some people go up to monthly, but I don't normally go to monthly. I start from daily for my own analysis. But for what we are doing now, I will start from the monthly. So when we go to monthly, for example, I'm using Euro USD, Euro currency against United States currency. I can now use my line chart. My line chart will give me, at least it will give me exactly where all the support zones, demand zones, and supply zones are. So I will, instead of using a horizontal line, I can use a rectangle. Here now, I'm trying to find, okay, I'm seeing a curve here. Uh-huh. Another curve. Look at this one. This is the most recent one, so we can remove this one. We are going to use the most recent ones because before the market could get to the other areas, it may take too much time. We pick the same rectangle. For you to activate this, if you don't have it on your tool here, you can just right click here, go to custom. So you see whatever you need from here, you can drag them from here to here. And anyone you don't need, you can remove them. Like okay, all these ones, I need all of them. So let me check if there's one I need here. These are well, for me, I don't need all these ones. So I can comfortably leave it the way it is. Okay, I will now pick my rectangle again. Come here. Now I'll switch over to my candlestick so that I can fine tune it. So this now, this is now a zone, an area. You can see it. So with the help of line chart, I've been able to get exactly the supply zone, which is this one, and the demand zones. Okay, having gotten that, I will now go to my weekly to fine tune it. If I go to my weekly now, let me check. Okay, I can just chop them a little, adjust them. Okay. Mm-hmm. Then here I can see that I have something here. Uh-huh. This an adjustment. I will pick the rectangle again. The market, when the market, okay, we have another area here. Good. So here and here now. Let's now, okay, let me zoom out. Then from there, I will go to my dailies. This is daily chart now. Okay. I want to see where things are here very well. Mm-hmm. Yes. This is a kind of first breakout. This is a first breakout. So on daily chart, what do we have? There's another hidden demand zone. When the market was going up, it came down here. It went up. It came down. It couldn't cross here. It still went up again. So we can identify here. We identify here. Yes. Okay. Having done that, we still go back to, okay, we've gotten that one. We still pick here. There's another zone here. There's another zone. So, okay. Whereas we are going to remove because we are going to concentrate on the most recent ones. After that, we go to our 4 hours. Okay. So this is our 4 hours now. So from here now, at least we have seen this one work. I think this from the dailies. Let's check. Okay, let's check our weekly. Even on our weekly, yes. So this is ant zone. Here is important, and here is also what important. So we are going to adjust here now. These are the two areas we are going to concentrate now. These are the areas we are going to concentrate. Okay, we chop it like this. Okay. What again now? Let's go back to those ones. So whatever we're going to do now, we have seen very well, very, very well that here has been holding. This is a kind of zone. Look at what happened. The market, if you check this market now, this is an uptrend on 4 hours because it is making a higher high, lower low, higher high, lower low, higher high, lower low, high low. high, then it has not been able to break here convincingly. So until the market, if it breaks this area now, we are not going to do anything here now. What we are going to do to watch this area. If it breaks it convincingly, we now wait for a retest. If it can come back here, we now look for an opportunity to sell. But if it forms a kind of bullish rejection pattern here, like bullish engulfing candles, then pin bars, these are rejection candles, so we can now buy. And when we buy, we target here. Here should be our intraday target. So we buy here, we target here for our take profit. Then if it breaks these zones, these areas, this demand zone now, we now wait for a retest so that we can join the trade. Because if it breaks it, another area we can target. Let me check another area based on 4 hours. Here is not, I'm looking for a very important, okay, here, this is the area where we can target. If it can break here, then another area that we'll be targeting will be here. So these are how to trade. You trade from important zones. You don't just enter your trade just at the middle of nowhere. So let us check our 1 hour to find out what is happening there. Okay, can't you see? Once the market touched here, it moved and retested until it touched here again. It came there. It has, okay, first one, second one. This is the third one. Based on 1 hour. First, okay, it moved, it retested, and it respected this zone here. Another, it respected it here again, and it is here. It might also respect it. So we will not just blindly enter a buy trade here. Yes, we wait and see what happens. So based on what happens here, that will determine what we are going to do. Let me check 30 minutes. Okay, so let me teach you how to enter a trade. We found out that Tiana is an important demand zone based on 4 hours. Okay, even on dailies, this is a minor zone on daily, the demand zone on dailies. But on 4 hours, it's a very strong one. We can now look for an opportunity based on 15 minutes or 30 minutes. That is how to trade. We are going to use here as our case study now. This area. Look at what happened here. But let us go down to 30 minutes and see what happened. How one could have entered the trade earlier. That is why I like price action. Not that it works 100%, but it will give you an opportunity to enter your trade earlier and enable you to, at least for your stop loss, not to be too high. Okay, so let me go to, let me okay, look at it here. I want on 30 minutes. Based on 30 minutes now, look at what happened here. So the market rejected and it moved and it came down here. So here now there's an indicator we call Fibonacci. That Fibonacci. Let's see what happens here. What happened here? Okay. Okay, which is the thing tested the 71.6 area. And after that, what happened? Look at this. Now, to validate this, we are going to add up our volume indicator. So we go to volumes. Okay, like I said, if you are trading with only this volume, which means here can be an entry. Here. This is a kind of breakout, or even here. But I normally use it in conjunction with another one. Hawkeye volume indicator. Oh, it wants me to enable something to allow DLL imports before it could come. Okay. So with this now, okay, where we are supposed to enter the trade is here. Have you seen it? Either we enter here. If we miss it here, we can still enter here. Assuming we enter here, our stop loss will be okay. Our entry is 1.0810. So our stop loss will be this swing low. Let's check where this is our entry. Then our stop loss will be here. Okay, so here is our entry is 1.09. Entry is 1.09. Let me check again. Okay, 1.0810. Then our stop loss 1.08046. Just about 6-7. If you add up the little spread and the commission, let's say 1 point, we can just keep it 1.05. Have you seen it? Only 5 pips. Or we can give more room, make it up to extra 5. One, that is 10 pips loss, assuming it goes against us. So if we win, look at our target. There are two targets here now. For intraday targets, we can now target this area. We come here, and then that's exactly what it did. So here now should be our target. At least our target should be around 1.0852. So 52 minus 10, we're having about 42 pips. Okay, if I have 42 pips and losing about 10 pips, our risk to reward our risk reward ratio now will be complete 4. Which is if each of our trades, anytime we trade and win, we make times 4 of, or maybe if 5 of our trades are bad and 5 are good. We are losing, let's say each loss we are losing 10 pips. So 5 losses will be 50 pips. Then if you are winning, we are winning 40 pips. So 5 winnings will give us 40 times 5, which is 200. So if we trade 5 losses and 5 winnings, then what we are losing now will be like 200 minus 50. Assuming we make it 50-50, which will give us $150, 150 pips net profit. And many people have a higher win rate. Like myself, I normally have a higher win rate. My problem was cutting my profit short and allowing my losses trading without stop loss. That was the problem I was having before. When I was trading with indicators, entering with 5 minutes, 1 minute. Ah, no, 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 no. Now, I think what I've made a decision. I was entering before with 4 hours, but I found out that 4 hours requires too many time to wait. So as an intraday trader, I don't need to enter my trade based on 4 hours. The best is 15 minutes, 30 minutes, then the highest should be 1 hour. So this all about support and resistance, where you enter your trades. For example, now what we analyze, if you check now, based on 30 minutes, this is a kind of supply zone. But if you go to 4 hours, you find out that here is not a zone. What happened? This market was moving up. It came down to retest. Then when it got here, gradually until it touched this area. And when it was coming down, it didn't take here into consideration at all. So that's why it's not good to use lower time frames to draw your demand and the supply zones. The least you should use is 4 hours. So we'll now be trading now based on what will be happening there. Like what I was saying, as an intraday trader, for someone that doesn't like to leave his trade, his or her to exceed a day. Let's check what we did before. Uh-huh. When we have made our money here, we at least we should know that all we'll be targeting will be here, not to enter trade. If at all we should end everything we are supposed to be targeting will be here. But as an intraday trader, when our take profit has given us our target here. So we now look for an opportunity again to ride the trend the next day to this area. And the next day, what happens? Let us extend this. If you find out the next day, the market was just no go area. It wasn't doing anything at all. The market was doing nothing. Look at what it goes up, it goes down. This is consolidation. A kind of I don't know. The market was too choppy. Yes, but after that day, what happened? It continued until it touched here. So for swing traders, they would have waited until after 3 days. Their target would have hit. And when it gets here, is another opportunity to enter. What happened? as a price action trader. Look at this. A rejection formed, and this is the confirmation. Another entry here. If you enter here, 1.0876. So let's check the high of this, 1.0889. Okay, 89. We entered 76, 89, then 89. We can now give another, maybe under 2 pips. Okay, 89 plus 2, which is 91. 91 minus our entry, 91 minus 1.0876. So 91, okay, you have minus 10 is 81. 81, okay, this is about 15 pips or 16. That will be our stop loss. Then we target here, which took only 2 days. The intraday trader, if it gets here, that should be our target again. But if we should do like that, let me check. Here is 1.0858. 76 minus 58. So it doesn't make sense to enter. So if we must enter, we must target here to drive a very good risk reward ratio. So that is why most times, if you are making, if a trade is going in your direction, you don't need to cut it off. Yes, at worst, you adjust your stop loss to break even, and the break even, let it cover all the spreads, the cost of spread, and if you are using a broker that charges commission, you know. So these are the important things to do. That's all we are going to do for today concerning demand and supply. Next time we are going to check. We are going to treat trend lines, then how we can enter a trade fully using Fibonacci, then the Fibonacci ratio. Then we now another one we are going to talk about is dynamic support, which is the use of necessary moving averages. When we check if it is working, when it's not working, we remove them. So that's